What's up, folks? Science Morning Update, April 12th. So, yesterday we had double distribution the day before. We accepted here, and then we rallied. We missed the singles by a few points, so I'd still watch that 59.65 level. If we get above that, we should rock it. Actually, if we bid above 50, we should probably get above. A lot of bullish people today, which is weird on the Twitter stream, so we'll see. Downside support 03 to 96, that area. A lot of traffic in here. We lose that level, and then we should probably retest this 73, 76, and down to the 50 is really so that 39, 40 area. So we'll see what happens today. Again, gold up, dollar up, crude up. Kind of an interesting scenario from a macro perspective. That's a lot of red flags there. We'll see if that has any effect on the market today. Pivots 24. This is okay. 76. Okay. 08. These are okay. I kind of put these little zones in here for grins. So, above 72, below 88. But I mean, these are in general, but this is kind of where the consolidation in the trade has happened, especially this red one. And then you had this where we are now, so it's going to be decision time at some point. On the daily, here you go. I took out that trend line, but we're itching towards that 39.40 area, the 50-day. Again, 5100 would be the next major level down, possibly 23, but I would see that. But we're well above that, 120 above that. And we'd have to have this 73 break first. Here's your weekly coming back up onto the R1 for the year, 51.66. So we're obviously a little bit above that. But again, are we going to bounce here? Is this just a breather, right? We've had a few of those little breathers. I don't know. Everything's kind of wonky today, but let's take a look at. So we cleared up the cash gap yesterday. So we didn't clear up the singles on ES, but we did clear the SPX cash gap. Now that can be looked at two ways. One is it cleared it up and that was bullish. We're going to move higher, or it's a repair. So now we can move back down, right? I don't know. But either way, we're kind of holding steady. I'd see that 51.40 level is probably fairly important. You have a cash gap from 31 to 17. 50 days up at 51.05. And then you have another cash gap, 91 to 78. So I would definitely watch that 31 and 17 if we were to head back down there. But again, it's down 20. Dow's down 100 and NASDAQ's down 93. Here's the glaring, this just got crushed. So from a top here, 8.8 down to 6.4. I mean, that's a monster currency move right there. So this is what I'm watching today. If we get a close down here below this 6.9 level, which it looks like we're probably going to, unless we rally 500 ticks, which could obviously happen as well, then I think this is kind of the starting of a larger trend. Now, it probably end up into maybe 1 month and then hit a reversal if this is a larger trend. Gold, again, still going up. So that's really confusing everybody because you have gold up, dollar up, crude up. So this is kind of a geopolitical fear is what that says, right? That's a flight to safety. NVIDIA down a little. Apple had a nice ramp up yesterday. I mean, that was a good move. That helped bring the market up. Again, the Mag 7 was really what rallied yesterday to get everything up. I think bonds are higher today. So that's probably the only thing that's going to hold us up, right? So you have a strong dollar, strong crude, strong gold, flashing red lights in the macro, but then you have higher bonds. So that means that that's still looked at right now as kind of a safe haven. So we'll see, probably because the softer PPI number. Anyway, oops. So we will see. I'll be here in the room. Happy Friday. Stay safe. Don't blow your money.